Hi everyone, my name is Casey Darling, and for Module 4, I'm going to be talking about the valuation principle. The valuation principle is an important concept in the decision-making process. Once we have evaluated the costs and benefits of a specific decision in terms of cash, we need to choose the best decision for both investors and the firm. The best decision for the two will be the one that makes them both wealthier. This idea is known as the valuation principle. The textbook definition for the valuation principle is: the value of a commodity or an asset to the firm or its investors is determined by its competitive market price. The benefits and costs of a decision should be evaluated using those market prices. When the value of the benefits exceeds the value of the costs, the decisions will increase the market value of the firm. The valuation principle is important to both the firms and the investors. The pair want to make money and be wealthier than they previously were. By applying the valuation principle, they will have an easier decision-making process. The book provides us with an example opportunity. Say the firm you are working for has the opportunity to get 200 barrels of oil and 3,000 pounds of copper for a total cost of $25,000. You need to determine whether or not this opportunity is valuable to you and your firm by using the valuation principle. The current market prices are $90 per barrel of oil and then $3.50 per pound of copper. This ends up being $18,000 for oil and $10,500 for copper today. The value of the opportunity is the value of the oil plus the value of the copper less the cost of the opportunity, or $18,000 plus $10,500 minus $25,000, which would give us $35,000 today. The entry-level and mid-level professionals aren't directly affected by this topic. They are in charge of running the company at the ground level. The entry-level professionals take care of the frontline customers and daily operations, while the mid-level professionals will take care of the entry-level and basic managerial duties. The executive level professionals are the ones that are going to be applying the valuation principle. They need to consider all opportunities and determine, through the valuation principle, which ones are going to make their firm and their investors wealthier. Just as I have said in previous presentations, it is always a major responsibility of a firm to remain ethical when it comes to money. Because this principle affects both investors and the firm, the executive level professional needs to remain professional and honest. If an opportunity falls through, they need to be honest with their investors, and just like they would during any given business situation. Honest scales and balances belong to the Lord. All the weights in his bag are of his making.